Good morning, good afternoon. Welcome to Develop Your Edge with Anthony Crudele. I'm the co-host, Tom Schneider, CMT with NinjaTrader. Before we get into the good stuff, I do want to remind everybody the futures and options trading contains substantial risk. It's not for every trader. You can potentially lose all or even more than all of your initial investment. That's why we recommend you use risk capital. What is risk capital? It's money you can afford to lose. Doesn't keep you up at night, doesn't extend your retirement horizon. Also want to remind everybody that past performance is not indicative of future results, and what we talk about here in this program contains neither trade recommendations nor financial advice, but rather should be used for educational purposes only. With that out of the way, it's my pleasure to welcome back to Develop Your Edge, Anthony Crudele. How you doing, Anthony?
Good morning, Tom. Good morning, everybody. Thanks for joining us on a busy day. Actually, the markets just got busy, even though I think tomorrow should be the busy day. Today's starting to get a little action.
Yeah. It's we were just talking pre-show and big moves in the market, but really excited to talk about the topic today because we talk about this on the bookend shows, and it's something I've always felt, and I think you're going to make this very solid, very clear, and it's really talking about levels versus range of execution and why that matters. If you want to participate in the chat, by the way, if you're watching on YouTube, you can come over to ninjatrader.com/events. Just grab a handle, hit the play button, grab a handle, and we'll be asking some questions. So hopefully you can participate there. But Anthony, welcome back. Thanks.
Yeah, I welcome everybody to participate in today's show because when we get to the charts, I want to see what you guys think about support and resistance, and I'll actually go over ways that I would trade those support and resistance levels. But when you look at support and resistance, right, it's funny when you look at social media or when you go into maybe some of these chat rooms, you see over and over and over again, right? Everybody always talks about this guy's levels, this girl's levels. The levels are all that matter, right? When in reality, in my opinion, and I know this is going to be, I think a lot of people are going to think differently, the levels really don't matter. Now, why would I say that? Because let's face it, I follow so many different people. It's so funny how so many of the levels are almost actually the same levels. If you're trading the S&P 500 and you're a good technician, let's face it, most people are going to have similar levels. Maybe not the same levels, but they're going to be pretty similar. So what does it ultimately mean, right? If you have great levels as a trader, does that mean you'll make money? Most likely no. And why is that? Well, it's because you have to go and actually execute at the levels. And execution in the end is what actually makes you money as a trader, not the strategy itself. And I know that this is very controversial, and some people will say that they don't believe that. And I actually believe that a strategy is the most important part, right? The technical strategy that you use. I definitely believe that because if you don't have something that's sound, then you're not going to make money anyway, right? But if you have a strategy that you believe gives you some edge, this is develop your edge. If you believe it's so good, then just automate it, right? NinjaTrader's got automation on it. I've used it. It's great, right? If you think that your levels are so good, why are you going to sit there and point and click? Just let the machine just do its job. And when most of you know that if you do that, you probably won't make money, or you'll make a little bit of money. You won't make as much money as you wanted. So what does that ultimately tell us, right? It tells us that the levels matter a little, but what ultimately matters the most is the way you execute the levels. And so that's what we're going to talk about today.
So when you're talking about levels, let's be clear. It could be any type of levels. It could be levels that you see with your eyes pointing at the chart. It could be something that's calculated, such as pivots. It could be Fibonacci retracement levels, which can be automated. They can be subjective, but what you're talking about is it doesn't really matter. You might have different levels than I do, and generally they come around in the same place. If it's Fibonacci, it's the steady hand. If it's pivots, we might have variants of pivots, but really it doesn't really matter what those levels are. It's how you approach those levels when price approaches those levels.
Exactly. I think the most important part of a day trader is understanding the environment, understanding the situation, having great situational awareness. For example, if you're in a bull market and you have a bullish technical look on the daily chart. Then you come into your intraday trading and you get a bullish setup. That should trigger in your mind that you have support and confirmation coming from the bigger picture and now on the shorter term. So my thought process is anytime I get a long setup near a support level in a bull market with a bullish intraday setup, I'm going to buy at and above the price. So that means that I'm willing to buy off the initial reaction at the price, and I'm willing to add to that position above the price. Okay? Because most of the time in bull markets with a long setup, if you get a good reaction off of initial support, most of the time that market will go and act well off of that area. And a lot of you may say, I missed my entry by a tick, or it went to my level perfectly and ran from there. And the mistakes that a lot of people make is that number one, they just sit there and commit to buying at the price, right? So you work your order. I don't work any orders unless it's maybe 10% of my position at any level, because I don't want to be in until I see how the level reacts. So let's go for the bull market example. If I want to buy a level of support, I'll maybe work 10% of my order there. If you're going to buy 10 E-minis or whatever it is, I'll work to buy one. Now, if it hits that area and holds, mentally, I'm committed to adding at and above that price action because we're in a bull market and you have a bullish look. So it's just a simple thought process for execution. Now, let's just say that same exact thing happens in a bear market. You have a bear market with a short intraday setup. I'm willing to sell at and below resistance based upon the initial reaction. So in my mind, I'm already committed. I'm not going to miss this trade. Now, let's just switch the script a little bit. And I know we're going to get visual with this in a moment, but these are just, this to me is the most important set of rules that I have for executing support and resistance. That is, if we have a bull market on the daily and I get a bearish setup intraday, now I'm willing to sell at that price and above that price to be short. Why? Because now I'm thinking the longer term chart is going to supersede my short term chart. So if I get a short setup at resistance and I watch that initial reaction, I am not going to sell at and below that price. I'm not going to add as we're going down. I'm going to add as we get closer to my stop. That allows me to reduce my total amount of risk because now I'm trading closer to my stop. I'm selling intraday against a bull market daily. And so now I'm going to try and get as close to my stop as possible and reduce my amount of risk because I'm going against the primary trend. And the same thing would go for buying support in a downward trending market. I am committed to buying at and below my level because my range of execution should be closer to my stop because I want to reduce my risk by being closer to my stop. And the slippage in a downward market intraday that is a bear market is going to be slippage to the downside, right? So when you get support in a bear market, most likely the slippage is going to be below your level. And the reverse goes for getting short intraday against the bull market. So I put that out there because when we go to the charts, to me, psychologically, I come into the day. What has this year been? It's been a bull market. If I want to buy support right now, I look intraday, I see a test and hold, I'll buy at and above. I'll commit to add above my price. When I'm looking to get short, I'm going to sell at and above my price because the slippage is to the upside.
So when you're doing contra trend trades, right? You're talking about intraday, you're going to go against the overall trend. You're limiting your risk because you're taking those trades closer to your stop, knowing that most likely, if you see an intraday setup for the contra trend trade, you may not get it, right?
Exactly.
The probabilities of you getting it are smaller because it's contra trend. So you're going to limit your loss because, whatever the probabilities are, it's not in your favor necessarily, right? Whereas if it's with the trend, you're gonna go away from your stop because you're almost like testing the water. Okay, yeah, this is a level that's going to continue in this direction. I'm going to load up a little bit more as we continue that direction.
Exactly. Look at it from a boxer standpoint, right? Or a UFC, whatever you watch. Once that boxer takes your punch, the opponent takes the hit, you know what you're dealing with, right? If you give a guy a solid hit and he stands there and goes, man, you're in trouble. You're in trouble. And so you have to really look at it that way, because the market fights support and resistance levels. And we don't know it's support and resistance until it trades it. So until the market takes a hit at a level, you really don't know what you're dealing with. You don't know for that moment what the other participants are thinking. That's why I always say I could go back and show you a lot of great levels I've had, and it could look great on a chart. Talk about the fibs that you said. I mean, anybody that tells you you're just going to buy the 50% or the 3A2 and shows you a fib chart of how it works so well, you really kind of got to run from that person to begin with. But I can show you a million examples of when things work really well. And I say, if they do work so well and you believe it, then just automate it, right? Call me. I'll give you money if I see a strategy that's automated and doing so well, but it just doesn't work that way. And we all know that. So we all know that have done this for a period of time. So it's really important to see that initial hit, so you know what you're dealing with.
Right. You and I could look at the same level and take away completely 180 degrees, takeaway, right? I see it as resistance. You see it as a breakout level based on other information that you're looking at, right?
Exactly. So let's actually go to the charts now and let's get some visuals in here. And let's start off with the context of the day. So here we are at a E-mini S&P daily chart. Okay. And I've talked about this a ton of times on here, but for those of you that are new to the show, first off, welcome to the show. Secondly, one of the things that I look at for understanding where the market bias is, like, where is my bias? Like, what is the market telling me through its feedback of bull or bear, is the anchored VWAP to the first day of the month. Because every month and every year, there's really a tone, right? And so when you go back and look at January, which is right here, we have been grinding up above the auto-anchored VWAP. And I've talked about this. I actually have been long the S&P. I was long it for a while. You can see my line here. I started buying it around 30, just above 3,900, and I held it. I'm out of it now. I wish I kind of still had it. But ultimately, the point of it is that everything was lining up for the bulls. Now you get into February, although we're well above the January VWAP, which is way down there. February VWAP has now gone sideways. So anybody who's traded over the last couple of weeks, and I will tell you, I've lost money the last couple of weeks intraday trading, it's been very choppy, right? You're trying to stay with the bull look, and it's coming back. It's been one of those things where it's just not been the easiest. So what you do is you identify, for the beginning of the month, you say to yourself, it's just really a sideways to choppy thing, because look at green, red, green, red, green, red with the auto-anchored VWAP. So for the context of right now, we're bullish with potentially choppiness ahead. And that's because of Fed, CPI, all these other things that are coming out. Earnings, we get it, right? So coming into the day, you have to have the mindset of what I said initially. Do I want to buy at and above support if it holds? Do I want to sell at and below with resistance, at and above resistance? Where am I at mentally? And right now I am at this, if support holds, especially on a day where we're towards the lows, and maybe you use like an ATR or something to give you an idea of what the range is. If your support's in the middle of the range right now in February, context matters. You're in the middle of the range, you're going to get chopped up. But if we're towards the bottom of the range or the top of the range, I feel pretty confident that we're probably going to be a mean reversion type look. I'm more aggressive with the longs, less aggressive with the shorts. And I get that just from looking at an auto-anchored VWAP. Like I said, these are not indications. These are just sentiment checks, biases. So let's go to the intraday chart. Let's take a look. And so because I don't draw support and resistance levels, I'm actually going to go and draw some support on here. And like I said today earlier, Tom, maybe we get some people to come in. What does anybody have for support today in the S&P or resistance? I'd love to hear from you. Put that in the NinjaTrader chat. Some people are saying, somebody said the NinjaTrader stream is not working in mine. Maybe you guys want to double check that. I'm getting that message on my YouTube channel. But anyway, let's go and let's take a support and resistance line right here. And let's just use a basic one. Let's just go, okay, look at overnight support was right around, what was this area here? 41.43-ish, right? That's what was support. And like I said, this, I'm not telling you this is my support. I'm using a basic example, everybody. If I am looking to buy today at 41.43, right? Because that's the level I look at and say, that held overnight. This is something we looked at. Maybe on a pullback, I want to buy here. The mindset is what? Look at what happened, as I talked about in January. Bullish look, February is a little choppy. So the thought process is, let it hit 41.43. Once I see establish above 41.43, I work to buy at and above my price. Why? Because the overall trend is still bullish. We're on the outside of a potential range for the S&P. You have some negative looks today with the anchored VWAP going lower. Opening range is pretty much the high of the day. So you have some bearishness out there. So what you do is I take my horizontal line and I say, okay, what's my target? Let's say my target is 41.55, the VWAP, right? So initially I'll look at it and say 41.43 support, 41.55 target. So you've got 12 points potential, right? My initial thought is, okay, I've got 12 points of potential. Let's just say, for example's sake, you're going to risk 50% of what the potential target is. So you've got 12 points of potential profit. You've got 6 points of risk. Let's go back and draw another line. So that would put you in at 37-ish right there, right? It doesn't matter if the line's exactly 37, folks. It's just to give you a gauge of what it is, okay? Now, I look at it and I say, okay, so here is my range below my entry, right? And I look at this area and say, I do not want it to violate here. So this is my area of my red zone. I am not going to be a buyer in here. I want to wait to see it hold support and I will add above it. So I know that I've got 6 points of risk. What I'll then also do is I will go and I'll say, well, how much am I willing to add above the 41.43? And I'm going to say to myself, I'm going to give myself around $3, right? So now I've got about $3 above entry for my range of execution. I've got 6 points down below, where on a day like today, if it's down in here, I'm not going to keep adding to it because I think it's somewhat choppy. I don't feel like I want to be aggressive in it. I want to be aggressive after I see support hold and I want to buy it. And I'm going to give myself $3. So what I've established here, number one, is this is support. This is risk, right? This area is a no trade potentially today, because I have really a downward looking intraday, kind of not really giving me everything I totally want on intraday basis. So if it starts to slip below here, I don't want to get super aggressive because I could easily get stopped out, right? If we be above the VWAP and we were grinding higher, I would be very aggressive right at entry up above it. Maybe even I would really be aggressive almost in any area of it. But because of the way the look is today, you're just not. So now I have this 3 points of execution, which still gives me, even if I averaged, let's just say 44.5 of my entries, I still am looking at somewhere around $7 to $8 of risk, probably more like $7.5 of risk for the potential to make somewhere around $10, right? So I'm still within my 1-to-1, which I think is pretty reasonable. So I watch resistance or support hit. I see it holds. This is my range of execution on entry. And I know that because of all the reasons I talked about. And now we start to go back up, and that's where you look for, maybe it hits it, maybe it doesn't. Like I said, I'm doing all this in hindsight at this point right here, but you understand the difference, right? Now let's just say that hypothetically, okay, forget about the VWAP. Maybe what I'll do is I remove that for today and I say, look at February has been bullish. You got to put your thinking caps on here. Everything has been super bullish. What I'm going to do is now my range of execution really is going to be, is I'll just pull a horizontal line, as on a really big, strong day, I'm obviously going to step in and I'm going to buy aggressively upon it holding. And then I also will allow myself to add anywhere within this stop range, because now I'm basically saying, look if this support holds on an uptrend type day, I could be aggressive in this whole area because I'm getting everything to support what I want. So I'm going to buy at and above, but if I also get an opportunity to buy below, I'm willing to step in and do that. Because for me, I'm looking at it saying the trend is up. I really believe in the support area. So it goes back to initially, what's my mindset? Because it's choppy today, I'm not going to step in and just be long all the way down to my stop because it's stupid. Why would I do that? I'm aggressive. If it holds, then I step in and add to it, right? And now let's put our thinking caps on and let's just say the opposite happens. We're in a bear market. The market's been weak the entire time. We get a pullback to support. Now, it's pretty simple. Now, I don't add as it goes my way. I only add as it goes against me. So let's just say hypothetically, everybody, the market's been weak and we're trending down. Now my range of execution is everything below entry because I'm going against primary trend. So I'm going to establish a position here, which means ultimately I'm going to be taking on less risk, because if my average position now, let's just say, is 42 or 41 with a 37 stop, I'm risking less points. Now we're saying that we're using the same contract size for all of these. So in a nutshell, you understand that that level matters, but really it matters where you box it out and where you execute around it.
Right. And if you could extend those areas, right, you almost have one that's when you identify a support level, you're also identifying two range of executions depending on what your bias is, right? In reality, you'd only use one, so you'd only identify one. But for any support level, you would identify two range of executions, one if it's with the trend and one if it's with against the trend from a longer time period.
And remember something too, everybody, you're going to hit more resistance levels in your support and resistance levels in a bull market. So the pathway to the poorhouse is by taking every single resistance levels in a bear market or in a bull market. Let's face it. And the pathway to the poorhouse is buying every support level in a bear market. Buy it, cover, buy it, cover. And you see people just keep doing it. Well, I had support there and I bought it. This is why I always say you don't blindly buy anything. You don't blindly short anything. You have to watch the reactions. And what keeps you in this business over time is by becoming a better executor of that strategy, of those support and resistance levels. That is the key to success, is understanding the context of the market situation and identifying how you're going to approach executing those levels. Now, it's not always going to be perfect, but that little bit is what's going to give you an edge and really take you to the next level of your trading. Most beginners only buy support, only sell resistance at that price with one contract size. They don't do scaling. As you start getting more advanced, some traders will start to judge, do I want to trade more or less here? And as time goes by, you start to realize that a lot of it comes down to the reaction, and you scale in and scale out. And if I scale in initially and buy some or short some, and the market just blows right through me, that's okay. I don't get killed. For example, like today, if I would have just stepped in and bought it here because I like the 43 level and it just ripped to my stop, I'm not going to just keep buying it blindly the whole way down and just get stopped out for a full loss. The minute it would stop working, I'm just going to turn out of it. I only want to add when I show that it's holding, because right now we have a choppy type scenario. And that's where you've got to be smart. And that's where you've got to step in and become a trader, not just somebody who points and clicks at prices.
Excellent. Excellent. I like that explanation. Anthony, by the way, we are having issues with our chat, so we won't unfortunately be getting any. If you have I know you're looking at your YouTube feed. If you have anything in there, if somebody puts something in there, feel free to bring it on here. We also have a question of the week from Twitter,
Yeah,
which
let's
is
go
related
there.
to this. Yeah,
Let's go
let's
there.
do that because it's topical. So Michael, DTR_trading is his handle on Twitter, has a question. Why not wait for the reaction to happen and then look to enter? Does the scaling make a big difference in dealing with slippage? So kind of
Mike,
two questions there, but I think
yeah.
it's both are great questions.
And first of all, Michael is a great trader. You guys should all follow him on Twitter. He's a really good guy. I had a chance to talk with him a few times in chat. Good guy. So the first question I think I answered, right? The first question is why not wait for the reaction and then execute, which is pretty much what I'm saying. That's why I say at any point in time, maybe you take 10% of it on, right? Because at worst, at 10%, you're not going to get blasted, right? You get stopped out of 10% of your position. You're thankful. You're like, that's a winner, man. And I know Michael knows the answer to these questions, but I'm appreciate him participating in it. And then the second question, Tom, just read it to me again because I can't read it from here. I can only hear you say it.
Sure. It's does the scaling make a big difference in dealing with slippage?
Exactly. I mean, 100%. And to me, especially in the future side, and I know that Michael trades. I think he trades options. So it's a little different there. And once again, it's important that I do mention this. Like if you're trading options, this is a little bit different, right? Or event contracts. I'm not really scaling into those too much either, right? It's definitely more of a in and out type scenario. But for futures specifically, scaling to me is the most important part of my trading when it comes to the actual execution side of it, because it allows me to adjust my position sizing, right? Because I don't believe that every trade is the same. Not every level is the same. Why should I treat every level the same? So if I am in a choppy environment where most traders get really chopped up, it's too aggressive at the first test of support, the first test of resistance, and then it tests it again, and it tests it again. And I go back to even what I've done. Look, I'd love to say that I do everything perfectly, but I don't. The last couple of days, like yesterday was a day for me where I had a setup and I ended up getting in 2-3 times and I got nicked each time. And I was like, okay, at this point I'm done. But if I would have been in full positions each time, I would have just totally gotten slaughtered yesterday. But because I was like getting in, get stopped, watch it hold, regain it, hold a little bit, not add when it goes against me, get stopped out again. I mean, it's just one of those things that happens, right? So you have to understand that that's what keeps you in this business. That's how you last. Most people are going to get really chopped up on choppy days and lose way more than they should. And on days where we're trending one powerful direction, you're only getting one side of support or resistance getting tested. So therefore, if you just keep taking them and it's a trend day, you get blasted. So you have to understand the context of the situation. I mean, if you're buying a down day in a bull market and every level gets stopped out, well, that's just sometimes the way the cookie crumbles. That's going to happen. But if you're selling resistance every level and a trend up day in a bull market, shame on you. With a full position, you're just going to get buried. I mean, it's just the reality. Yeah.
You got to read the field, right? Read the play area.
Field, man. I've been there. It sucks.
Yeah. No, great. No, thanks. And thanks to Michael, of course, for that question. If you want to send a question via Twitter, just make sure the question has a hashtag AskDYE, and also follow NinjaTrader at NinjaTrader and make sure that's part of the tweet too. And we'll try to get it on here on the show. We pick one a week, so hopefully you can participate. And I know you have some CME message that you want to deliver as well, Anthony.
Yeah, I think it's important. Every week I talk about these event contracts. Everyone, if you're new to what I'm doing, you can go to placeyourtrades.com. I've got a ton of stuff going on there. But to learn more about these event contracts, which are daily options, which is really cool, is in a new announcement this week. Most of us are using pretty much all of us at all of us at Place Your Trades are using the event contracts app through Tradeovate, but pretty much everybody that's trading these contracts are using the Tradeovate app for them. But to learn more about what's been going on, you go to cmegroup.com/event contracts. And like I said, the new announcement this week is that they added strikes. And so these are daily options on these contracts. Like today, I know it's choppy. I know CPI is coming out later. Was it tomorrow? I think, right? Yeah, was it Is it next
I think
week?
it might be next week. Next week.
Yeah. Nonetheless, it's earnings. It's just really just kind of been choppy. And I said to myself, you know what, buy some nose this morning. So I bought nose because I thought maybe we could go down a little bit. But instead of me just sitting there trying to get short futures, I buy the nose, which are puts. And now we've added more strikes. CME Group has added more strikes to them. So every 10 handles in the S&P, there's a strike. And I think it's a great day trading product. To learn more, you go to cmegroup.com/event contracts or go to placeyourtrades.com.
Yeah, we noticed that Monday, right? Monday is when they rolled out the new strikes, and
makes it a big difference. Much
yeah,
better.
It does.
Much better product for day trading right now. I think right now you can go in there and you could find a lot of different strategies now that they've added more strikes to it. It's a really great tool.
Awesome. Thanks. And thanks again, Anthony, for hosting the show. I'm glad to be a part of it. Anything else you want to just give people how to get a hold of you?
No, just go to Anthony Crudele on Twitter. Everything flows through there. And also at anthonycrudele.com. Just really leads to all the free stuff I give out. And really, I have some new stuff, cool stuff coming out there. And eventually my book, which will be, I don't know about the end of this year, but the beginning of next year. So you find all that at anthonycrudele.com.
Nice. Great. Yeah. Lots happening at placeyourtrades.com too. So excited. I've been following it, watching the videos. It's great fun. So appreciate that. And I want to thank all of you viewers for coming. We'll be back here. I'll be back here in the afternoon, bars closing, and Anthony and I will be back here next week. In the meantime, have a great trading day.
See you, everybody.